About 18 months after you incorporate, an envelope arrives from the Inland Revenue Department, and it starts a clock. So here's the direct answer. Your first Hong Kong profits tax return, Form BIR51, is issued roughly 18 months after incorporation, and you have 3 months to file it, with audited financial statements and a tax computation attached. Miss it, and the department can simply estimate your profits and tax you on the guess. In this video, what's in the envelope, what you must attach, how the rhythm changes after year 1, and why the envelope never arriving is worse news than arriving. That last one catches people every year. Form BIR51 is the Corporate Profits Tax Return, the form on which your company reports its assessable profits. The first one is special in 2 ways. First, the timing. It arrives around month 18 because the department waits for your first accounting period to close, and that first period can legitimately run up to 18 months, which is why your first return can cover your entire life so far as a company. Second, the deadline. The first return comes with 3 months to file. Enjoy that, remember the number, because it's generous exactly once. The form itself is short. What makes the first return a project is what attaches to it. Since April 2023, every active corporation files its return with supporting documents, the audited financial statements. Every active Hong Kong company needs that audit, as we covered in our audit video, and a tax computation showing how the accounting profit becomes the assessable profit. Both stand on your bookkeeping. If your records are the shoebox kind, the return is where the shoebox gets expensive, as our bookkeeping video explains. And if you plan to claim offshore profits, that claim goes inside this return. The step-by-step is in our offshore exemption video. The practical point. The return is the deadline, but the audit is the critical path. An audit takes weeks at best. Month 17 is not the time to introduce yourself to an auditor. From year 2, the pattern changes. Returns go out in bulk on the first working day of April, and the printed deadline is 1 month, not 3. 1 month is tight, which is why most companies appoint a tax representative and come under the department's block extension scheme. Your filing deadline then follows your accounting year-end. Broadly, December year-ends file around mid-August. Year-ends from January to March file around mid-November, with loss cases getting until about the end of January. And April to November year-ends get no extension at all. The exact dates shift slightly each year. They're on screen and in the description. One more first-timer surprise. Your first assessment usually bills the current year and provisional tax for the next year, credited against next year's bill. Budget for roughly a double hit once. Now the trap I promised. No return in the mail does not mean no obligation. If your company has assessable profits and no return has been issued, Section 51(2) of the Inland Revenue Ordinance, Chapter 112, requires you to notify the department in writing that you're chargeable within 4 months after the end of the basis period for that year. Stay silent, and the exposure is real. A fine of up to 10,000 Hong Kong dollars, plus up to 3 times the tax undercharged. The department doesn't accept "the form never came" as an excuse. The duty to speak up is yours. Profitable and 18 quiet months in? Don't celebrate the silence. Write to them. 3 honest notes. 1. The 3-month window shrinks to 1 month from year 2. The companies that cruise through year 1 and relax are exactly the ones that miss year 2. 2. The deadlines above assume a tax representative on the block scheme. Without one, you're on the printed date. Full stop. 3. Your accounting year-end quietly decides your filing deadline forever. So choose it deliberately, not by default. Hong Kong's paperwork is light by world standards, but it is punctual. Low tax, not low standards. The facts in 20 seconds. First profits tax return. About 18 months in, 3 months to file, audited statements and tax computation attached. Later years. Issued early April, 1 month, or block extension dates by your year-end code with a tax representative. First assessment. Current year plus provisional. And if no return arrives but you made profits, notify the department within 4 months of your year-end. Section 51(2) of the Inland Revenue Ordinance, Chapter 112. At Captime Corporate Management Limited, the first return is our home ground. Bookkeeping that's audit-ready from day one, the audit arranged, and tax filing under one roof. And your deadlines tracked so the envelope, or its absence, never surprises you. Book a free 15-minute consultation at captime.hk or use the link in the description. No credit card, no obligation. Thank you for watching. If this took the fear out of the envelope, give it a like and subscribe. Accurate, hype-free guides to running a Hong Kong company. See you in the next video.